the trend of markets has been, ever since the US broke the Bretton Woods standard, because earlier you were pegged to the gold standard, and therefore the dollar was considered, you have to print $1 for every ounce of gold in Fort Knox. Ever since they debased, the value of dollar has actually collapsed. And while the 3% number he may be saying is right on a 150-year basis, from that 1970s to now, that's the magic period. And in that period, remember, the rupee was 4 to the dollar, and we had 90. So in rupee terms, the Indian housewife has been the smartest person to think that the value of what I'm buying is going down every year. Even in the period when it peaked in 1980 and did not perform for almost 20 years, in rupee terms, he was still making money on gold. So this institutional memory that our families have of be in gold and be in real estate was an inflation hedge in India. The additional inflation hedge you're now getting with Trump blowing up the US economy is the developed world is trying to inflate its way out of its debt problem. Japan is expecting, the average Japanese expects a 10% inflation rate in Japan, wow, which cannot even grow at 1 or 2%. So imagine how poor those people must be feeling. Like I have a friend who I went to business school with. He was the head of Bank of America. After he retires, he's still commuting in by metro and lives in the suburb of Tokyo and can't afford a big home. So that kind of wealth devastation which has happened in these countries, we haven't seen anything yet. And these guys are going to print their way out of trouble. We will be silly to keep accumulating reserves and thinking this dollar is worth something. I think the new world of China, Russia, Saudi have realized we don't want to hold dollars. And to the point he made on geopolitics, when Saudi says, I'm hiring Pakistan for the nuclear umbrella, is because they saw that America did not come to the help of Qatar or Iran or whoever. So that equation breaking down is leading to a lot of changes. And gold to me is not, it's not an equivalent of a stock. Gold is a currency. And if the BRICS had to settle amongst themselves, you're not going to trust getting a ruble or a yuan. But if the net settlement happens in gold, you'll be okay to do the trade. That's what these guys are going towards. And I'm not suggesting gold today. I mean, at 4,000, it's gone parabolic, and like our markets, it will have a consolidation phase. But this story is not over yet. This move away from tech to hard assets, which occurs every decade unfailingly, is very much on. To just draw back memory, in the 70s, you had the famous run in gold, silver, and oil, preceded by the then Nifty 50 of the US. Then it flipped over in the 80s, and you had a 12-time multiple expansion of the Japanese and the Taiwanese stock market, which was the era of, those were emerging markets then, and then they went down for 30 years. Then it flipped in the 90s back to NASDAQ, and you got the famous stop again for tech. 2000 to 2010, we came back to emerging markets and hard assets, and you know what happened to commodities in that period, and we were going crazy on infrastructure and Vedanta and Reliance and all of that in that period. Then they went nowhere for 10 years. The last decade was the decade of tech, and back to US, and indeed the rise of China. We did not even know Tencent and Alibaba and all existed. We used to pride ourselves on our tech companies, and look what happened across the border. And then they went to sleep. And this decade, the move already has happened towards the hard assets. China is nothing but a hard asset country. It is really the most powerful country in the world today, much as I hate to say it. The fact is, it is there, and it competes with US on an area of superiority now. When Trump tried to wave around his thing of tariffs, one day they shut the critical minerals, next day they stop buying his soya beans. And the guy is talking very, very politely to them. So the world has changed. And if this AI boom had not happened, this to me is the last sign of the mania. That if you're buying a capital goods stock at the peak of the cycle and the peak of the margins and giving it a $4.5 trillion market cap, there is serious money to be lost. They are 70% of global market cap. Are you telling me for the next 20 years, US will make 70% of the profits of the world? 10 companies are 25% of global market cap. This, I mean, I'm not that old, but I'm old enough to understand this doesn't last. This is like when you wake up, you look back and say it was obvious this is going to blow. And there's serious money to be lost. And to keep this party going, they print money. Every morning they wake up and the notes are printing. And it's foolish countries who are accumulating these and thinking these are reserves. Therefore, the smart money, the bigger central banks of the world are buying gold like there's no tomorrow. They're buying silver like there's no tomorrow. So it's gone to platinum, it's gone to uranium. We are only looking at gold because that's what you can trade or what you can see. But this move is for real. Our hard assets, when you put up a cement plant, when we came to the market, it cost 64 crores. Today it is at least 10 times that, if not more. You did nothing, you sat on your cement plant, you were worth 10x. By then you've repaid your loans because the value of the loan you have to repay also goes down in rupee terms. So this trade is here, it's for real.
No, so a couple of things from what you said. Do you think there's an AI bubble brewing globally? That NVIDIA is making no sense in where its valuations are. And did you get in on that trade?
Like he rightly said, I mean, $10 billion data center investment in India. Do you know what the capex spend of these guys is in US? The Mag 4 are putting $800 billion. How do you ever make a return on it? And the market cheers. Like we were even looking at Alibaba in China, they made an announcement that we will also spend money on data centers, and the stock rallied very hard. And people like us are scratching at because actually this data center is a rental business, and you would value it like a REIT because that's all you're going to make on it. The intellectual money is going to go to the guy who owns the AI, not to the fellow who sold you the chip or who's running the data center for you. So again, to cut long story short, you've seen Broadcom, what is the company, Nortel or Cisco, the way they peaked in 2000, those prices don't come back for like decades after that. So we'll see how this plays out.
Okay, so there is an AI bubble.